Hey, what's up, stock compounders? Brad here. So today I want to do a Q&A around the magic formula investing. I made a video yesterday, most of you probably saw it, about my second round of magic formula stock buys. I've got the spreadsheet up here. It is linked in the video from yesterday, so check that out. The only thing I updated today was this last column of prices because I wasn't able to buy them yesterday because all of the research that went into creating this spreadsheet, figuring out which five I wanted to buy, took me past when the market was closed. So I bought this morning at these prices, equal weighted, so I put an equal amount in each of these five stocks that are highlighted blue. And I just wanted to go through a few odds and ends around the magic formula today. There were a lot of great questions. But I want to start with an email I sent Chris Meyer, author of 100 Baggers, which I've referenced many times on this channel. And really, I wrote Chris because, I'm trying to find good insider ownership information, okay? Insider holding percentages. And, different services, the numbers are all over the place. And so I wrote Chris trying to figure out, what services are most reliable in terms of figuring out what the insider ownership is. And so I'll just pull this up real quick. He basically said, yeah, the same issues. Numbers are all over the place using different services. And there doesn't seem to be really a service that's always really accurate, right, across the board with a bunch of different companies. So he uses different screens from different services to just try to get a sense of which companies have a high insider ownership. And then you actually have to dive in to the company filings to figure out, what's the true number. That's where that information lives, in the company filings. But he sent me this cool screener based on insider ownership within FinViz, which he likes to use. So that was cool. So big shout out to Chris Meyer for responding to my email. He's actually really good at responding to emails. If you follow his blog, Woodlock Family Capital, I think that's it. Check that out. And then you sometimes at the end of a blog post, he'll leave his email, or you can even just respond to that blog post. Or if you've signed up for the newsletter, which is really easy to do, you just leave your email, and then he'll send you those blog posts whenever he creates them. But big shout out to him. I'm sure he's very busy managing a fund, but I really appreciate him getting back to me on this. So, it's what I suspected. It's very difficult to find accurate numbers for insider ownership using a service. I still think Value Line is probably one of the better ones, just because it's a premium service. They actually collect quite a bit of money from subscribers, most subscribers, not me, since I found a little wormhole to get access to that through a library in Virginia. But they seem to have a robust research team. But anyway, what I did is, someone in the comments on yesterday's video said, I looked up TNET insider ownership, and it was like 1 point something % on Guru Focus. And he was trying to figure out, which number is right, the number you gave from Value Line or the number I got from Guru Focus. So I went to the company filing, the company filings. And I will link this one in the description. But it shows security ownership of certain beneficial owners and managements, right? This is as of April 6th, 2020. And it groups all of the directors and then non-director named executive officers. So really, to get a sense for what the insider ownership is, you just look here, all executive officers and directors as a group, okay? These are really people who kind of have a say in the direction of the business, right? So you've got 27 million shares owned by that group of people. And you can see up here how it breaks down. So 27 million, 67 million is the number of shares this company currently has outstanding. So almost 40% of the shares are owned by insiders, either directors or the active management team. So verified. Value Line provided an accurate data point on that one. So that's really how you dig in to figure out what's right. And this is from Form Schedule 14A, which is a proxy statement, okay, which came a little bit after the annual report came out, the 10K. So you can find this if you just go to sec.gov, search the company name, and then you'll see all of the company filings. Another way to get at what the insider ownership is less directly is to go to Open Insider and look at recent insider transactions. And what you can see here is, whether this insider bought or sold. In this case, the director Babinek sold at this price. It says he sold this many shares, and it says what he owned, okay? How many shares he owned. So this gives you a sense, okay, this is how many shares this insider owns, and you can kind of look at the value change and the percent to get a sense for, the total worth of insider holdings for each of these insiders. If you scroll down a little, you can see here's the big kahuna here. 21 million shares owned. So that lines up with, if I'm able to find it again, let's click on it. Here it is. So that lines up exactly with Michael Angelakis, okay? So that might be an easier way than digging through company filings. Again, this isn't directly from the source, so there may be some inaccuracies here, but it may be a quicker way at a glance to kind of get a sense for what the insider holding percentages might be. Open Insider, fantastic site. And then I wanted to go over this Greenblatt article. So my plan for these magic formula stocks is to hold them for 3 years, okay? And then reassess after 3 years whether I want to continue holding or whether I want to sell. And that was partly inspired by this article that Joel Greenblatt put out. So when he came out with the magic formula, he did a really smart thing where he tracked two different kind of approaches for people using the magic formula. One approach was people who self-managed, okay? People who, got the magic formula list and picked 5 somehow, right? But they chose the 5 every 3 months or however often that they wanted to invest in. The other approach was to have kind of a hands-off, systematic investment. So basically robo-investing in the magic formula approach, okay, where everything is automatic. There's no human decision-making. The stocks are randomly picked. They're sold after a year. The next batch is bought. So there's no human discernment going into it. And what he found was that the system, the robo magic formula approach, outperformed these self-managed accounts, okay? And what the reason was for that is that managers who were self-managing, they were avoiding the companies that had the dark clouds over them, right? Companies that were in the doghouse in terms of no investors wanting to touch it. But in reality, those companies tended to be some of the best performing stocks over the next year, right? Because they were in the doghouse, the price was so low. No one wanted to own it. And because of that, the price had overshot the bad news on the downside, right? You get the human emotion in, you get everyone running away from it, and it's often the case that the price drops below what makes rational sense. Even though there's some bad news, there's still a business behind it. There's still the ability to generate income and profits. So that was an interesting finding. But the big thing I want to point to here is this last point. Many self-managed, right? That's not it. The best performing self-managed account didn't do anything, okay? After the initial account was opened, the client bought stocks from the list and never touched them again for the entire 2-year period. So this test period, robo investing with the magic formula versus self-managed, was for 2 years. And this best performing self-managed account, they bought the initial round of magic formula stocks and then they didn't do anything for 2 years. They kind of stuck it in a coffee can and forgot about it. And that one did the best. So the message to Joel Greenblatt is, when it comes to long-term investing, doing less is often more. And that's really, that's part of what inspired me to hold these stocks for longer than a year. If I feel like I can improve upon the magic formula by applying certain filters, like, a super investor has to own it, or it must have a Value Investors Club write-up. I'm only going with companies that are big on insider holdings. The idea there is owner-operators tend to outperform. It's more likely you'll have a 100-bagger on your hands if the incentives of management are aligned with the equity investors. And then, making sure there's not too much debt as compared to the last 12 months of operating income. So I'm hoping, using this filtering methodology, I'll be able to pick stocks that might do better over the long term than the average magic formula stock. And so, 3 years, it's really something that was planted in my mind from Monish Pabrai. His whole thing is, if I buy a company because I think it's trading for 50 cents when it should be trading for $1, I think it's fair to assume that in 2 or 3 years, Mr. Market will actually price it correctly. Okay, can take 2 or 3 years for that mispricing to correct itself by the stock market. So 3 years, I don't know, it just kind of feels right. I've gotten that kind of data point from a number of different places. I think Joel Greenblatt has mentioned 2 or 3 years for the market to price things accurately. So that's my current plan. Hold 3 years and then reassess. And I'll also link this article in the description. It's a great article to read if you're doing magic formula investing. Probably help you out with that. And then lastly, I wanted to just get into a few comments from my last video. This is, after all, a Q&A for the magic formula. So let's get into some of these. Right, Garrett Motion, yeah, that's one I bought in the first batch of magic formula stocks that filed for bankruptcy a couple weeks ago. It's been interesting to see the stock price go up and down so much over these last couple of weeks since it filed for bankruptcy. It's a kind of an interesting learning experience there. What do I want to talk about? Jesse there sent his 2 picks for what ones that he thinks will outperform. We'll see how that goes, Jesse. I'm curious. Someone shamelessly cloned me, Pavel. That makes me a little nervous, but he also had a good suggestion here in this spreadsheet to add notes to each column, kind of what my guidelines are for, what I need to hit, so that I don't have to do any of this by memory. I'm building it all into the spreadsheet. I will definitely implement that. Someone read the book. That's awesome, Anand. Popular commenter. Really appreciate you, Anand. Let's see. Questions. So this is one. So the return on invested capital parameter for the magic formula stocks is really, it's all about the last 12 months of EBIT, right? Earnings before interest and taxes is the number that Joel Greenblatt uses. And, since I'm planning on holding these for longer than a year, I do think it's very valuable to look at, well, what have the returns on invested capital been looking back for longer than a year? Okay. 3 years, 5 years, 10 years back, because that's going to give me a lot more confidence that it's a great business. If the return on invested capital has that history of kind of high figures, high returns. So that's definitely something I'm going to add to the next batch of Magic Formula stocks, is looking longer than a year back in terms of return on invested capital. Appreciate that, John. That's a fantastic suggestion. I do not have a subscription to the Acquirer's multiple. I'm too much of a cheapskate. When you go through Dataroma data, you seem to not trust reported price, right? So when it says reported price in Dataroma for what super investors have bought in the last quarter, that's just the price on the last day of that quarter that these holdings are being reported for. So for the second quarter, which is the last 13F filings, it would just be the price on June 30th, at the close on June 30th. Okay, super investors do not have to disclose their buy prices. They only have to disclose how many shares they owned at the end of the quarter. So it's a great question. There's a lot of confusion about that. What are your thoughts on Joel not owning stocks from his Magic Formula? Joel is probably one of the greatest hedge fund managers in history. I think he generated like 40% annual returns for something like, it might have been like 20 years. Okay. So if I were Joel Greenblatt, I would not be using a mechanical stock screener investing approach. I would be diving into individual businesses and trying to find where that discrepancy between the stock price and the stock value was highest. So I do not fault Joel at all for not doing the Magic Formula. Tobias Carlisle, great book, Acquires Multiple. I have not read Deep Value. I should put that on my list. There's a few great questions from Scott here. You are deviating from the Magic Formula strategy by adding other levels of screening. Have you found this more effective? So I'm hoping it's more effective. Honestly, I don't know if it's going to be more effective because I've only been doing it for 3 months. And, my results from the last 3 months are going to be irrelevant because this is really a long-term strategy. It's really a long-term strategy. So I don't know. I'm hoping it's going to be more effective. I think it will be, because by targeting companies who are owned by a super investor or who have a Value Investors Club write-up, who have high insider holding percentages, these are approaches that great investors that I know use. They make intuitive sense to me. You've got there's been the eyeballs and the mind of a really smart investor who's looked at this company and said, hey, this is something, where there seems to be value. Okay. So honestly, I don't know. The reason I'm doing it is because I think it will be more effective than randomly picking Magic Formula stocks. But the reason I'm doing it is to see if it's more effective, to see what kind of returns it generates. The only way to get that information, in my opinion, is to execute it and do it for 3, 5, maybe even longer number of years and see what the results are. So that's what I'm doing. You don't analyze if the price is attractive. What are your thoughts on this? So built into the Magic Formula investing screener is whether it's cheap, right? There's 2 filters. Is it cheap based on earnings yield? Is it good based on return on invested capital over the last year? So I didn't feel the need to use another filter to try to determine if it was cheap. I'm relying on Joel Greenblatt's filters for cheapness. That's already a check mark there. So Yeah, those are great questions, Scott. Anything else? Right, FinViz, TNet only has 1.1%. I've already kind of explained that. You really need to double check these numbers when you're using screeners for insider holdings. What does a negative number in the debt column mean? So the debt column is really about net debt, okay? And net debt is simply debt on the balance sheet, total debt, minus cash, okay? So if it's a negative number, that's fantastic. It means we have more cash than debt on the balance sheet. That is a very strong position for a company to be in. So that's what negative net debt means. I think that might be about it. Let's see. Right, if your super investor sells, will you sell? So originally, my plan was I was only going to buy Magic Formula stocks that were owned by a super investor, and then I would simply wait until that super investor sells before I sell. Right, that was going to be my cue to know when I was going to get out. When it was disclosed through 13F filings that super investor had exited the position. Now that I've kind of loosened the super investor criteria, where it can either be owned by a super investor or it has a value investors club write-up, I don't have the luxury for all of these picks of waiting until I can find out that this super investor has sold, because some of them aren't owned by a super investor. You can see the first one, the third one, and the fifth one aren't owned by a super investor. I bought them because they had these value investors club write-ups. So my new plan is to just hold for 3 years and then kind of dig into the company at that point, look at some kind of basic numbers like what I have outlined here, and try to figure out, is it fairly valued? Is it still cheap? Is it overvalued? Where do I go from here? Maybe another super investor has bought into it by then, and I can kind of piggyback on them. So I'm not really sure yet exactly what my exit strategy is going to be, but I have time. I have 2 years and 9 months from when I bought my first batch of Magic Formula stocks. So, I'm okay with having kind of an open loop on that one, an open end. Yeah, I feel okay about that. So yeah, that's it, guys. I just wanted to run through these great questions from my video yesterday. If you haven't seen it yet, check that out. And yeah, if you guys are investing in the Magic Formula approach, I'd love to hear from you. Let me know how long you've been investing with the Magic Formula, how it's been going, what your struggles have been, if you're picking stocks at random or if you're using some kind of filtering process. I'd love to hear from you. It's fun to hear from others who are implementing a similar strategy, just to kind of compare notes. So please do that if you are a fellow Magic Formula investor. All right, guys, that is all I got. I will see you tomorrow. Take care.